All right, today we're jumping into something really interesting, a corporate move that can sneak a brand new company right into your investment account without you lifting a finger. We are talking about corporate spinoffs. So let's set the scene. You're scrolling through your portfolio, you see your usual holdings, and then boom, there's a new name in there, a company you have never, ever heard of. You didn't buy it, so what in the world just happened? Is this some kind of mistake? Or is it a gift? Nope, not a mistake at all. You have just been part of a spinoff. It's this really fascinating thing where a parent company basically takes one of its business units, says, "Go on, you're free," and launches it as its own separate, publicly traded company. And because you owned a piece of the parent, you automatically get a piece of the new pie. Okay, so that surprise in your portfolio, it really begs a much bigger question, doesn't it? From the company's perspective, why on earth would you break up a perfectly good business and just give away pieces of it? Well, let's put it this way. Imagine a huge company that's famous for making construction materials, right? But buried inside it, they have this other division that provides construction services, and it's absolutely crushing it. The parent company might look at that and think, you know what? That services business could grow even faster if it wasn't stuck under our roof. So they spin it off, give it its own CEO, its own strategy, its own stock ticker. And that gets us right to the heart of it, the why. It can seem totally backwards to break a big company into smaller pieces, but believe me, there are some pretty powerful reasons to do it. The biggest reason, hands down, is to unlock value for shareholders. You see, sometimes these giant, complex companies get hit with what the street calls a conglomerate discount. The market basically undervalues them because they're just too complicated to figure out. The big idea here is that the sum of the parts, as two separate laser-focused companies, will actually be worth more than the original jumbled-up whole. But it's not just about chasing a higher stock price. A spin-off lets both companies get really, really focused. The new company is suddenly way more nimble, more agile. And the parent company? It can protect itself from the risks of a more unproven business line. And here's the kicker for you, the investor. This whole thing is usually structured to be a tax-free event. Pretty nice, right? Okay, but spinoff isn't the only word you'll hear. It's actually part of a bigger playbook. There are a few different ways a company can break itself up, and the differences are really important for you to understand as an investor. So for you, the investor, the real difference here boils down to one simple thing: choice. With a spin-off, it's totally automatic. The new shares just magically appear in your account. But with a split-off, you've got a decision to make. The company comes to you and says, "Hey, do you want to trade in some of your parent company stock for shares in this new company?" It's your call. And just to round things out, there's a third way to do this. It's less about giving shares to current investors and way more about raising cash from new ones. This one is called a carve-out, and it's a whole different ballgame. A carve-out is basically a mini initial public offering, an IPO. The parent company takes its subsidiary and sells a small chunk of it, usually under 20% on the stock market. And here's the big change. Instead of giving you shares, the parent company sells them and gets a huge pile of cash from brand new investors. All right, let's pull this all back to you and your portfolio. Those new mysterious shares are sitting in your account. What does this actually mean for you? And more importantly, what do you do now? All right, so here's a little insider tip, something the pros watch like a hawk. Very often, in the first few days or weeks after a spinoff, the stock price of that new company takes a nosedive, which of course makes you wonder, why? Why is the price dropping? Did Wall Street already decide this new company is a total dud? Not necessarily, and this is super important. A lot of the time, the reason is purely technical. Big institutions, think of giant index funds that have to track the S&P 500, they get these new shares, but the new company is too small to be in their index, so their own rules force them to sell, no matter what they think of the company. This creates this big wave of selling, and for an investor who's paying attention, that can spell opportunity. So when it comes down to it, you've got three main paths you can take. Number one, you can just hang on to both. keep your original shares and the new ones, and enjoy a little extra diversification. 2, you can sell the new shares. If you're not a fan of the new company's story, just take the cash and run. Or 3, if you do your homework and think this new focused company has a bright future, you could see that initial price dip as a fantastic buying opportunity. And that really captures the spirit of it, right? A spin-off isn't just a boring corporate reshuffle. It's an event. It's a moment that creates a brand new investment. And you, the existing shareholder, you get the very first crack at it. But, and this is a huge but, it's no magic bullet. It's not a guaranteed win. A 2022 study from Harvard Business Review found that, get this, about half of all spin-offs actually failed to create any new value. A quarter of them, flat out, lost value. Only about 25% were successful. It just goes to show you, the idea might be brilliant, but the execution has to be perfect. But even with those risks, when they can hit big. And we're not talking about some obscure financial maneuver here. This is a major league strategy used by some of the most famous companies on the planet. I mean, just take a look at some of these Hall of Famers. PayPal exploded into a fintech giant after it left eBay. Ferrari became this pure-play luxury icon after it spun off from Fiat Chrysler. And just recently, the legendary General Electric kicked off its own historic breakup by spinning off its healthcare division. These are huge, transformative success stories. So that really brings us back to the big question, doesn't it? When those surprise shares land in your account, is it a gift of pure untapped potential, or is it a gamble on a company that has yet to prove itself? Well, the answer, as always, is that it's up to you to do the homework. Thanks for tuning in to The Explainer.